Good afternoon, everyone. My name is Bartley Miller, and I am a partner with Sterling Seacrest Pritchard. And I want to thank you for joining this presentation today and listening to what I have to share with everyone. I want to thank Dr. Perry, Kate, and the rest of the GOGS team for inviting me and asking me to provide this presentation to you. This is a recording, so there's nothing better than speaking to yourself. I am a live audience person, but I am going to do my best to make this entertaining, educational, and hopefully allow you to walk away from this presentation with some things to think about, things to plan for, and certainly some action items that you can use to support your practice. So the presentation is an insurer's perspective on malpractice litigation. So today, what I want to do is I want to share with you what is going on in the malpractice litigation market, what is going on in the malpractice insurance market, and again, share with you things to think about as it relates to this, and frankly, just provide you education on really what's to come and what are the things that we're dealing with within the malpractice industry. So a little bit on me, so you know where I approach this and where I come from. So I'm a partner at Sterling Seacrest Pritchard. I've been doing this basically exclusively in the malpractice industry for about 15 years, or I guess over 15 years now. I am the co-managing partner of our healthcare division, along with my brother, who many of you may know, John Miller. I often say I am the younger, better looking, more entertaining brother. But happy to share this information with you. A little bit about the company. We have changed over the years. Many of you knew us when we were a really small agency, really only doing healthcare business. We are actually now the largest independent brokerage firm in the Southeast, roughly about 75 million in annual revenue, 300 plus employees across 8 offices. We have 25 team members that are solely dedicated in the healthcare market. Most of that staff is located in Atlanta. We do have a healthcare team in Savannah, Georgia as well. We are a full service agency. We do everything. So commercial insurance, employee benefits. We do private client work for our physician clients who need help with their home, car, boats, cats, dogs, etc. We work with the vast majority of the insurance market as far as the insurers that are actually assuming the risk. And then as it relates to services, traditionally we're known to be brokers or placement specialists, where we are out there placing the insurance and negotiating terms, negotiating pricing. But to be frank, the real value add of what we bring to the table is much more in the risk management consulting, kind of strategic thinking, and guidance and advocacy that we provide to our physician clients, especially when it relates to claim time or patient safety issues, etc. So I'm speaking to you on this topic really from a place where we know what is going on with various insurers. We hear from the market constantly about changes that are happening both in the state of Georgia, but also nationally. And that includes working with carriers like the Doctors Company and Medical Protective and Curie, some of those household names, but also organizations that are writing risk all over the country or the world. So we bring kind of a broad perspective to this conversation, along with our relationships and constant communication with the defense firms that are representing our physician clients in Georgia. So let me give you an update on kind of what's going on. What are the litigation trends in the MPL market, or medical professional liability market? So first of all, let's talk about what's going on nationally. The blue bars in this chart speak to frequency, or the number of claims that are being filed. The majority of this information is pulled from the National Practitioner Data Bank reports. And you can see that the good news is really since 2001, which is the last time we were in a quote malpractice crisis in this country, the number of claims filed has reduced, and frankly continues to reduce. Now, we have seen it slow down a good bit, but number of claims are down. Now, the bad news is severity is up. So you see the red trend line there. That is the per defendant paid loss severity nationally, and you can see roughly around $400,000 per paid claim, and we continue to see that trend rise. Now, that makes some sense, right, as it relates to inflationary, the inflationary impact on cases, the cost of life care plans, the cost of medical expenses, things of that nature. So we are seeing that continue to rise, and I frankly don't expect to see that slow down. Now, Georgia is a little bit of a different story, and I'm going to speak, specifically to the state of Georgia, is where most of you are, I would assume. In this state, we've actually seen an increase in frequency. So if you look at 2012, that was really the kind of bottom of the trough as it relates to the number of claims filed, and we've really been trending upward since then. Frankly, more concerning and really what has the malpractice insurance marketplace concerned is the severity figures. You can see that severity north of 600,000 compared to the national average of 400,000, more than $200,000 gap. That is significant and one of the primary concerns. And frankly, one of the reasons we're seeing a significant turn in malpractice pricing from a premium perspective in the state of Georgia. And I'll speak more to the severity trends as we go along here. Now, what I did is I pulled out those claims that are obstetrical related. And this pulls from various buckets. So it's not absolutely specific to just obstetrical risk, but it is obstetrical related claims. So what you see here is frequency is up. The bars are a little bit all over the place, but you can see trend overall is up. Concerning there too is obviously you would expect, because of the potential damages that we deal with in obstetrics, the severity is higher than what you see on the average. Now, interestingly, in Georgia, it's only about 5% higher than the all other classifications or specialties, in obstetrics related claims versus all those other specialties. We typically see a higher delta there, but that's what the figures look like in Georgia. And as far as the national trend, you can see it's basically double from a severity perspective when dealing with obstetrical claims in the U.S. versus what the average is across the U.S. and all other specialties. One of the things I'll hit on a lot today, and really what is driving the concerns in the medical malpractice insurance marketplace is the higher value of indemnity payments that we're seeing and the trend of those indemnity payments. So this is information that was given out at Plus. And what is concerning here is the red bars represent claims or indemnity payments that were over $1 million or $1 million or above. And you can see that red section has grown since 1985 pretty dramatically. Also more concerning too is the blue section, cases that paid less than $250,000 has shrunk. And this is a trend that we continue to see, and it speaks to the value of cases that are being paid. So when you look at that trend in Georgia specifically, you'll see kind of an alarming trend, and that is the percent of cases over $1 million, and that's represented in the red or maroon bars in this chart. In 2010, we had about 5.7% of cases that were paid over $1 million. In 2020, that's 10.8%. Almost doubled in size, and then you can see, also that cases that paid over $250,000 has also increased significantly from 2010 to 2020. Again, this speaks to the cases are being valued higher, cases are being settled higher. Certainly, if cases go to the courtroom, there is chance for a higher value in the indemnity payment. This has really turned the tide as it relates to the way insurers are looking at the state of Georgia. So this is the concentration of large verdicts from 06 to 2020. And you can see in Georgia, which this number has now risen once you look at the 2020 numbers, there were 10 cases or 10 verdicts in excess of $10 million in the state of Georgia. Really alarming when you look at this list. Illinois, New York, Pennsylvania, Florida, those have always been known by reputation to be some of the worst venues from a malpractice perspective in the country. And Georgia is now in the mix with those venues and is really being considered to be one of the worst venues in the country. Now, I often get the question about, are all large verdicts really, metropolitan risk, right? Are they all coming from Fulton, DeKalb, Clayton County? And the answer to that is yes, the majority of them are, but the reality is we have seen large verdicts, large malpractice verdicts all over the state of Georgia. And frankly, we've seen some large verdicts in what the defense attorneys and what certainly I would consider to be what have historically been conservative venues. Example is Hall County. You've had two on this list at $8 million, where we would generally consider to be Hall County to be a good venue. And I'll speak to some of the impacts on venue changes that we've seen in recent years. But you can see that really no matter where you are, you've got risk of potential significant verdicts. Now, I will tell you, if you look at a map of Georgia and you look at venues, the only venues that have really outperformed and continue to outperform is really kind of the very north end of the state, especially, the northwest part of the state. That has always been a very, very good venue for defending malpractice cases. But a lot of these venues have changed dramatically in recent years. So all this to say, Georgia as a state is getting a lot of national attention as it relates to kind of our performance and the severity that we're seeing in this state. Now, the National Foundation for Tort Reform puts out a report they call the Judicial Hellholes report every year. So in 2019, Georgia made this top 10 list for the first time in the history of the report. I believe the report started in 2001. And keep in mind that this is not specific to malpractice risk or professional negligence risk. This includes auto liability, premises liability, product liability, et cetera. But it speaks to being a defendant in the courtroom within the state of Georgia, and certainly an alarming trend here, and something that again has gotten the attention nationally of where Georgia is headed from a litigation perspective. All right, so what are the things that are driving severity? So I'll talk about a few different pieces here. Number one, the economic conditions. We have more expensive life care plans, especially in obstetrical or brain damage infant cases. Those are being argued more aggressively than they ever have. The cost of future medical expenses, the trends that have come with that are driving those costs up. Another economic consideration is the fact that because we went through this historic soft market, and when we say soft market in the insurance industry, that means pricing reduced, underwriting guidelines maybe lessened, and you otherwise had a really good purchasing market as a consumer. What happened with that is because malpractice insurance costs went down dramatically, many physicians and hospitals, et cetera, elected to purchase higher insurance limits. So that has put more money in play from a litigation perspective because those limits have been increased. Now, as you look at courtroom considerations, the reptilian brain theory, this is something that's often talked about. And I certainly think there is some truth to this, and that is plaintiff attorneys are utilizing this theory in the courtroom where they are basically trying to get the jury to use their natural survival instincts as it relates to the way in which they respond to the information and to the case that they're reviewing. And this has been used often in malpractice, but also in auto liability claims. And the thought process here is the plaintiff attorney is trying to argue to the jury, that they owe an obligation to protect their fellow citizens, their mothers, their fathers, their children, in making sure that the defendant who did this changes their behavior. The example would be like a distracted driving situation where they claim, hey, if you don't take action and you don't do this, you're putting your family at risk by not teaching this defendant a lesson. This is often used in the malpractice space, and you can easily connect those dots, and that is they're trying to have the jury, protect their family members, their community from a physician that has egregiously, harmed a patient. Or even if it's not egregious, that someone has to pay because the only way they're going to respond and change the way they do things is if they have to pay money. So that's constantly being used. The plaintiff's attorneys are trying to become experts in utilizing that, and we continue to see it. The other thing, jury is desensitized on money, social inflation impact. This is constantly talked about, and that is everyone has a different opinion on what is a dollar worth. We see professional athletes with millions and millions of dollars in contracts, and people just look at money a little bit differently. So a $25 million verdict today is very different than a $25 million verdict 10 years ago. And we continue to see the impact there. Just look at the national debt we have, right? And the billions and trillions of dollars that we constantly talk about. Again, people just think of it differently. Changes in jury polling. So Georgia has changed the way they poll jurors. Has opened up the polling pretty dramatically. That has changed the demographics of the jury in many counties across the state. An example is Gwinnett County used to be a really good or conservative or defense venue, and that's changed pretty dramatically, and now considered to be not as great a venue as it used to be. We have seen these specific venues deteriorate. For many of them, they've been the same, Clayton County, Chatham County down in Savannah. But we've had venues like Cobb County that have historically been really, really good that have now changed. Another thing, COVID-19 has certainly created a backlog in the courtroom. Has that been helpful or harmful? We won't know until these cases resolve. I will say that I think we will see a push to resolve cases before they head into the courtroom. I think it's going to just create additional delay in litigating these cases. I think it will add from an expense perspective as it relates to paying defense attorneys and going through discovery and just the delay that comes and staying up to date with what's going on with a case. We'll see how that has an impact. Now, I will say COVID-19 could have what we refer to as a halo effect for healthcare providers. God bless all of our healthcare providers as we've gone through COVID-19. I hope that the American public has an appreciation for everything that our healthcare providers have done, and hopefully that gets us more friendly jurors when we do go into the courtroom. So legal considerations. So a lot's changed in the legal profession. We used to see kind of smaller plaintiff firms take med mal cases, and they may have been trying a general liability case, a deck collapse, or a premises claim, a trip and a fall, on a Monday, and then on a Tuesday trying a med mal case. And that typically led to the defense bar having a significant advantage because most of the defense attorneys that are managing these med mal cases are really experts, and they really know medicine, and they know how to argue cases, they know how to educate juries, etc. Well, we've seen that change. We have seen cases that are being navigated. So the plaintiff's bar, maybe the one who takes the intake of the case, is bringing in someone else to actually try the case. And those firms that are trying those cases are more experienced than dealing with healthcare litigation. So we're certainly seeing a trend there. Look, there are so many wealthy plaintiff firms out there, and the consolidation within the plaintiff's bar has been significant. There's a reason they can pay for all these billboards. And they are taking a lottery mentality as it relates to many of these cases. And they want a chunk of flesh, and they're going to try to maximize their return, and really have become marketing companies to a great extent of just trying to create flow, because they're looking for those home run balls, and when they find one, they want to go after it. Third-party litigation funding. This is a newer trend that we've seen in the market, really probably over the last 5 to 10 years. And what that is venture capital money that is going to plaintiff attorneys and offering to give them money to invest in their cases with obviously a return on the back end. Insurance companies used to be able to drag malpractice cases out and starve a plaintiff attorney, where the plaintiff attorney finally would throw up their hands and say, okay, we'll take a lower number because I don't want to invest another $100,000 into this case as it relates to experts or trial prep, etc. That's changed, and we've seen it change because of this litigation funding. They can go out and get the funds they need to take the case to trial if they really believe in it. And that, again, I think is certainly an impact on driving value of these cases. Time demands and bad faith trends. I'll speak to this a little bit more in a minute, but we are seeing time demands utilized by the plaintiff bar way more often than we used to. And that is, they're coming in, case is filed, or case even isn't filed. And let's say they file the complaint and they say, hey, look, we are willing to take policy limits if you agree to it within the next 60 days or 90 days. So really not going through any discovery, really not having tremendous support in the care, but starting the clock on the insurance companies and on the physician to say, we want our money and we want it now. And if you don't, we're taking this case all the way to trial. So there's a fear factor there, and something we're certainly seeing. I'll speak to the bad faith trends here in a moment. Changes in the healthcare industry. We all know that there's been significant consolidation in medicine. I think that has changed the perception of jurors as it relates to the target. It may not be the local physician who's been in that community forever. They look at it as a large health system that is potentially owned by someone not within the community. And I certainly think that has created kind of desensitized the jury as it relates to the value they want to go after. Physician extenders, there's been a lot of talk over the years that the utilization and the expansion of physician extenders would create additional liability. I certainly think in certain circumstances and in certain specialties, we've seen that. I think, we have seen some additional liability. We've seen some severity that has come from that. I would argue it has not been as meaningful as I might have expected, but certainly it does create a different dynamic, especially for the physicians if they're not directly involved. Limited access to healthcare in some communities. I think that there is truth to this, and especially on the obstetrical side. I mean, think about how many L&D departments have closed in rural communities throughout Georgia. It's not good. It's not good for women's health in this state. And we're not the only state that's dealing with it. And that is, I think, doing two things. Number one, what's it doing to prenatal care? Are we finding issues early on and able to treat them or manage that care? And then the other piece is when they do arrive, they may have had to drive an hour and a half to get to our facility. And what are we then dealing with due to that delay? And would it have been much easier if there had been someone to take care of them in their community? So I certainly think that's having an impact. Claims management approach. I will say, and I don't like it. I think there's certainly some value to it, but the insurance companies are beginning to lean on analytics and really look at past data to make decisions on cases, and really using that data to make decisions really early on in cases versus the historical approach of really evaluating the case, digging into the details, going fully through discovery, getting expert opinions, and not just two expert opinions, but five expert opinions. That was kind of the historical approach, is to really dig into these cases before there was any discussion of whether there was a settlement offer or whether a case would go to mediation, et cetera. We are seeing a trend to kind of get rid of cases earlier, and that's concerning. And I think it's driven by data, and I don't think you can use data to evaluate each and every one of these cases. Very similar to the way physicians treat patients. Everybody's not the same. Now, there's certainly things that we lean on as far as historical knowledge, et cetera, but every situation's different, and every patient's different, and every case is different, and those need to be valued. So I think that's one of the things that you really want to dig into when evaluating a malpractice and partner, is how do they approach these things? How do they really approach claims? Another issue is rapid expansion of insurers' defense panel. Two pieces to this. Number one, a lot of the defense attorneys that have been in this game for a long time are retiring. The baby boomers are getting out, so there's new attorneys that are coming in that may not have the same experience that those others had, or absolutely don't have the same experience. The other issue we're dealing with is the expansion of the insurer's footprint. I mean, we've got insurers now that have historically maybe focused in 1, 2, 3, 4 states that are now working all over the country. Well, that has an impact on case volume, and has an impact on the complexity of managing all these different venues and the knowledge that you really need to go into the courtroom in those communities. And even more so, who are the defense attorneys that are really, really good? And I think that's led to some growing pains. I think some insurers have really learned some lessons there. But I will say I do have concerns, just having done this for a while now, of how insurers are approaching claims. And I think that is one area that I would very much focus on as it relates to being a buyer or consumer of malpractice insurance. So this list could go on and on. You could spend an entire presentation on why severity trends are up, but the reality is they are, and there's so many varying factors on why. So what are the adjusters saying? So before I put the presentation together, I really wanted to evaluate, or I really wanted to reach out to the claims adjusters from the various insurers and hear more about what's going on in the market. What have they seen? Because they are really in the weeds on all these cases and dealing with the defense firms. So I kind of put together some quotes, some feedback that I got. Overall, there were many of them that said their claim counts are flat or down, so they aren't really feeling the frequency that is shown in the numbers, which is interesting. But what they did say is that the severity of the claims that they do have, are carrying higher potential damages, and that is that a higher percentage of their cases are or have a potential for higher value, which certainly supports the severity trends that we're seeing. Um, They also said, plaintiff attorneys are continuing to name as many parties as possible in these claims, which is a trend we've always seen. But one of the biggest struggles for them is frustrations of dealing with various insurers, and now with how many malpractice insurers are really taking different approaches than what they may have historically done. Example is you've got three defendants in a case, maybe you've got three different malpractice insurers, and let's say one of the malpractice insurers very early on in the case settles out of the claim or out of the litigation. That then turns the target back on the parties that remain, and the working together as a group to really defend the medicine has deteriorated over the years, and that's not good for anyone, and something that they get frustrated with. Talking about attorneys are continuing to leverage time demands without significant discovery or expert support. We continue to see that. I mean, I feel like every case we get in these days, the plaintiff attorney very early on is trying to create leverage and trying to start the clock. Now, the savvy claims adjuster and defense attorneys, they don't worry about that. You can always restart the clock, but it certainly creates additional stress for the physician. We are seeing insurers run to settlement. I will tell you, I think that's driving more activity. We've got more people involved and attorneys engaging in bringing these suits and driving up potential value. Why not file the complaint and see if they can get out early? That goes back to kind of training the dog, right? And not allowing them to get comfortable with that approach. With the concerns of severity trends, it says physicians are concerned with severity trends and are often pushing for early settlement negotiations. There is concern about, is today's physician, interested in really participating and defending good medicine, or are we more interested in settling out of the courtroom because we don't want to deal with it? We don't want to deal with the stress of it. We don't want to deal with the potential severity risk, et cetera. I will tell you, we certainly see that trend, and not right or wrong. But it is creating additional probably settlements, probably value creation for the plaintiff attorneys. And, we really look, if it is good medicine and we didn't do anything wrong, then we need to fight and we need to protect the interest of the physician. All the attorneys are approaching these cases for policy limits. They look at every one of them as a policy limit case. Again, speaks to the value, their perception of value. They're ignoring the defense mitigation arguments. They have a total disregard for the medicine, and they're looking solely at what will a jury say. Right? What is the perception of the jury? Do they have a bad outcome? I mean, we all know that there's good medicine and bad outcomes. Right now, there's bad medicine and bad outcomes, but good medicine and bad outcomes, there's things that physicians cannot control. And the plaintiff's bar likes to ignore those details. We're seeing claims take so much longer. A lot of that has to do with COVID. If you get involved in litigation, you need to kind of buckle up for the delay. It's not going to move quickly. And then we are seeing new plaintiff attorneys enter the malpractice game. I mean, they're coming in because they see the potential values. I mean, they look at the same numbers we do, and you're having a run there. Now, this last one, insurance executives continue to have concerns over potential bad faith claims. Are insurers willing to fight and support their insureds? Bring up this point, and that is that if you're a physician, you have consent to settle rights under the policy, meaning that the insurer has to get your approval to settle a claim on your behalf. Now, the opposite of that is not the case, and that is the insurer doesn't want to settle the case, but you do. You can't really force the insurance company to do that. Now, if you want to settle the case and the insurer elects to take it to trial and there is a significant verdict, there are things that you can do to protect your interests. And what ends up happening there is bad faith claims back against the insurance company. And that is that the insurance company puts you in the position to have this significant verdict that may be over and above policy limits, and you can then sue the insurance company. Now, there is more bad faith claims out there than I would argue we've ever seen in this industry. Some of it related to, frankly, just negligent claim handling. Some of it really related to the fact that they took the control away from the physician and really put the physician's assets at risk. This is one of the things that we spend the most time on. We have an in-house legal team. We're navigating these, evaluating these cases, recommending and advocating for our insureds, but certainly a trend that we see in the market. So I'll run through this quickly. This is just some obstetrical claim data from the Medical Professional Liability Association. These are claims from 2016 to 18. Key points here: 55% of all claims were dropped and deemed to have no merit. Now, the average defense cost for those cases is $40,000. So this speaks to where malpractice expense comes from, right? Is even though we didn't do anything wrong, we still got to defend it. And that's $40,000 that the insurance company's picking up. 36% of the claims resulted in an average indemnity payment of $460,000. Higher than at that time, the $372,000 for all other specialties. Those claims, 37% of those claims involved a patient death, and the average indemnity payment was $503,000 on those claims. 40% of them involved birth injury, peripheral nervous system, or injury to the peripheral nervous system, had an average indemnity payment of $543, and then the most expensive outcomes were cerebral palsy at $914,000. You know, unfortunately, and this is a little morbid and negative, but you know, oftentimes injury to the patient that's going to last for an extended period of time versus death creates additional value, right? And it's because of life care plans, future medical expenses, et cetera, and that's proven in that information there. Now, 8% of the claims, which that speaks to the number of claims that actually go to trial, it's not significant. The jury found in favor of the OBGYN 91% of the time. Now, the average cost of those claims to defend them were $193,000, but that 91%, again, if we feel like it's good medicine, we need to fight it, and we have a very good chance, a really good probability to win the case in the courtroom. This is claim data that actually comes from a MedPro study on closed claims from 2009 to 2018. I bring this up really just to look at this first one, and that is delay in treatment of fetal distress. Looked at 24% of the cases came from that allegation, and 39% of the total percentage paid were related to that allegation. That continues to be the big driver in obstetrical losses, and certainly drives the most severity within the cases that we deal with associated with obstetrical claims. All right, so what is all this leading to? It's leading to a firming NPL market. And what that means is underwriting guidelines are starting to become more stringent. Premium is going up. Insurance companies are looking at physicians that potentially have past claim activity under a different light. So it's tightening up across the market. And I think we're going to continue to see this probably for at least the next 5 to 6 years, unless there's some meaningful tort reform in the state of Georgia. And that just talks about the historical look at it and why I expect it for another 5-6 years. So what this is this is the combined ratio of the NPL market going all the way back to 1978. So what the combined ratio is if you take the total company expense of an insurance company, what it takes to run underwriting, business development, claims, etc., plus what the claims that were paid during that policy year are, or what has been reserved on those claims during that policy, and divide that by the written premium, you get the combined ratio. And this is kind of the simplest measure of the financial performance for an insurance company. And what it doesn't take into consideration is any investment income that the insurance company makes on their assets or their surplus, which represents a significant amount of the return for the insurers. So theoretically here, anything over 100% is bad, right? That means that from an underwriting profit standpoint, the insurance company is losing money at over 100%. Now, that's not really true because they're getting investment income, and I'll show you a slide here in a second that'll speak to that. But what this shows you is, there's basically always been waves in the market where we go up the wave and down the wave and up the wave and down the wave. And what we have been in really from 05, 04 till about 2015 was that soft market I referred to. Now, the numbers have been trending up since 2016, but really until the last 24 months have we seen a significant shift. And we are starting to see significant shift in combined ratio. You can see it up probably in the 115, 117 range across the industry. Now, some carriers are excess of 130. Others are in the low 90s. But generally, the market is underperforming, and we're seeing this trend. And if we believe what's happened historically, then we will continue to see this trend go up for some period of time and then hopefully fold back down. All right, so operating ratio. So the best way to think about this is the net number. So once we take in, the investment income and remove the taxes, et cetera, this is really how the insurer is performing from a profit perspective. And you can see, even at roughly around the 100% or 115%, that they're still these insurers are still making money. Now, they're not making near the money that they made, let's say, in 2010, where they were making significant dollars. Now, what happened from 05 to, let's say, 2015 is these insurers were making significant money, so they have significant capital. So the insurers, frankly, are as well capitalized as they've ever been. So they can deal with this hard market that is coming, and they can deal with some poor financial performance. But as the insurance market goes, they're going to take advantage of what everybody else is doing, what their peers are doing, and what they believe they need to support their risk. Plus, they've got to follow the regulatory guidelines within the states in which they're writing. But this speaks to the fact that they did have significant profits during these periods of time. However, they're going to go the other way if the market holds true. This speaks to rate changes. So in Georgia, we've actually had, numerous of the insurers have taken in the last 3 years 3 to 5 or have filed 3 to 5 rate filings or premium increases, base rate increases in the state. And we continue to see that happen. We expect more to come. I know there's already some filed for late 2021 in December, and then we'll see some more filed, I'm sure, in early 2022. But this speaks to the national numbers. You can see, we're going to start to see more and more, and you'll see these blue bars continue to increase because I think across the country, we're going to see additional rate filings within all the states as this market trends upward. One of the other things that's really impacting the market is related to reserve redundancy. So the way to think about this is when an insurance company gets a case in, it may take 5 to 7 years for that case to finally adjudicate, whether it's settled or dismissed or whatever it may be. Well, what happens during that time period is the insurance company puts up reserves, what they think the value of that case is or the potential risk of that case. So let's say they have a case that they put up a reserve for $1 million for potential indemnity. And upon final adjudication of that case, they end up paying $500,000 versus $1 million. Well, that money then comes back into the insurance company because they've reported the $1 million, they paid the 500, and what that creates is a redundancy. And that has significantly helped the financial performance of the insurers, because typically what they've reserved has been higher than what they ultimately pay. We're starting to see that flip. And frankly, we have seen many of the insurers take pretty dramatic steps in really increasing their reserves because they've seen this number flip. So we don't expect them retrospectively to get the financial benefit of these reserve redundancies moving forward. And it's very similar to what we saw in the early 2000s. And we think this is going to have an impact on the financial performance of the market. All right, so what are some things to consider during a firming market? Number one, plan and budget for it. You're gonna see premium increase, and that's what's going to happen, especially in obstetrics, and you need to be prepared to manage that. And also just speaking historically, premiums are still lower than where we were, let's say, in the early 2000s, but we expect those to trend upward. I would budget conservatively at a 10 to 12% trend in cost, because I think that's probably where the market is going to be. Now, that's assuming no losses and no significant changes in practice. Next point is be a good consumer. Look at options. Look, the only way you create leverage in the market is by putting these insurance companies in a position they have to compete for your business. That's what we do for a living, is we put insurance companies against one another, so they have to fight for business. That's how you control costs. That's how you create value in options and coverage forms, et cetera. So be a good consumer on that end. Evaluate options. Look at the GOGS program, which I'll talk about in just a second. Look at alternative risk financing options, right? Evaluate, should I be taking on a deductible? Should we be looking at a captive? All those things. We evaluate those constantly for larger buyers. I would encourage you to make this decision. If you move insurance companies, don't think about just today. Don't think about what the savings are today. Think about, is this the right partner for me for the next 3 to 5 years? A big part of planning for the firming market or hardening market is controlling volatility. And there are a lot of insurers out there that are not well capitalized, that are newer to the market, that may throw very aggressive pricing offers at you, but they are not in it for the long haul. And you've got to know what you're doing. Now, it doesn't mean that every kind of low number that you get from the insurance market is a bad decision. I'm not saying that at all. What I'm saying is really evaluate the insurance company. Are they AM Best rated? How well capitalized are they? How much business do they have in the state? How much obstetrical business do they have in the state, et cetera? Align yourself with the right partner or advocate. Find a partner or a third party that is only interested in guiding you and advocating for you, and only wants your best outcome, not the insurance company's best outcome. That's probably been the biggest success story for us, is that the insurance companies, we are friendly, we try to be great partners, but at the end of the day, my client is the physician, and we advocate for the physician. I want the best outcome I can for my physician, and you need someone like that in your corner to guide you, and certainly don't rely on the insurance company for that. Focus on patient safety and risk mitigation. I think this goes without saying, but what changes can you make in your practice to limit exposure? I often ask that question to our clients to say, hey, what's the first thing that pops in your mind when you think about limiting potential exposure? And it often leads to great conversation where we think about ways that we could mitigate liability where the physician has a legitimate concern. Educate yourself and your staff on risk. I think it's always big in obstetrics to really educate those around you, to say, hey, this can get us in trouble. This can cause issues for me, and I want you to understand why and what you need to share with me. Last thing, and this is one of the things we always say, kind of risk management 101, act like the fireman, right? Don't run away from issues, run to it. If there's a problem, if there's a concern, if there's a patient issue, if the spouse is unhappy, whatever it may be, run to that problem, communicate, apologize, have empathy, create a relationship, but run to the problem. Don't run away from it. Now, you got to be strategic, and you certainly need guidance on those, but we don't want to run away from issues, because inevitably when we do, they end up coming back to bite us. For those of you that don't know, the Georgia OBGyn Society has a relationship with the Doctors Company, and has for quite some time. The discounts within the program are available to anyone who is a member of GOGS. And if you want any additional information, you can reach out to me, you can reach out to the GOGS team, you can reach out to another agent of the Doctors Company. But I'd encourage you to evaluate the Doctors Company as an option for your malpractice insurance going forward. And it certainly supports GOGS, but it also could be a great benefit to you. If you ever have any questions on that, you can feel free to reach out to me. All right, and that is the end of my presentation. I hope that was valuable information. I hope you enjoyed it. Hopefully I made it a little entertaining. My contact information is there. Feel free to email me, call me. Any questions that came up during the presentation, feel free to follow up with me after. I believe I am going to take some live questions after this recording, and I'll look forward to doing it then. Thanks so much for having me.